Lucid was expected to be the firm that would be hurt the worst by the dilution of shares as a result of the warrant nature of the stock from the beginning. This was especially true when Lucid was trading at more than $25 per share. However, due to the recent drop in the price of the stock to below $18 per share, Lucid would be able to redeem all of their publicly traded warrants. In today's video, we'll talk about Lucid's public warrants and how they've done in comparison to other companies in the sector. Stay tuned. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. First and foremost, we are grateful to be able to provide you with the video every day, and you are as much a part of this channel as we are. In our comments and community section, we've been actively listening to you and taking notes on what you'd want to see on this channel. Now, we've gone one step further to encourage you to actively participate by polling your opinions and letting us know what you believe is relevant. That's why we recently created a poll asking for suggestions about whether you wanted to know about Lucid announcement of public cashless warrants or not. And the overwhelming majority of you voted in favor of yes. So, without further ado, let me make public warrants simple and straightforward for you to understand. So, what exactly are public warrants or stock warrants? A public warrant is a stock warrant that is sold specifically at an initial public offering. It grants the holder the right to purchase a specified amount of shares in a specific firm at a specific price and on a specific date. A stock warrant is issued directly by the company. When an investor exercises a stock warrant, the shares necessary to meet the obligation are not received from another investor, but are instead received immediately from the company, hence subjected to dilution. On September 8, 2021, Lucid Group stated that it will redeem all of its existing public warrants to purchase shares in Class A common stock. CEO Peter Rawlinson was thrilled to announce that the company's public warrants will be redeemed cashless. This is a significant step forward in their efforts to streamline their capital structure by eliminating outstanding public warrants at the same time that they are witnessing an increase in investor confidence in Lucid's groundbreaking in-house developed electric vehicle technology, which will soon be introduced to the market in the Lucid Air. It has been determined that Lucid will require cashless exercise of the public warrants in order to allow warrant holders, including its retail investors, to own shares in Lucid without having to pay for them in cash. The business anticipates that taking this move will reduce dilution from these publicly traded warrants. Lucid's public warrants are traded on the NASDAQ stock market under the symbol LCIDW. The holder of each public warrant has the option to purchase one share of Class A common stock for $11.50 per share. Under the terms of the warrant agreement, Lucid is entitled to make redemption of all outstanding public warrants if, on each of 20 trading days, the final selling price of the Class A ordinary stock is at least $18 per share for the third day before notice of redemption is live. This could explain why Lucid was trading under $18. Each of the registered holders of the outstanding public warrants will receive a notice of redemption, which will be delivered by the warrant agent on Lucid's behalf. For the avoidance of doubt, warrants to purchase common stock granted under the warrant agreement in private placement are not subject to this notice of redemption, and they may continue to hold on to their warrants if they so choose. Warrants are valid for a set amount of time, but they are worthless when that period has passed. Lucid public warrants will stop trading on the NASDAQ at 5 p.m. Eastern Time on October 8, 2021, and will no longer be available for purchase. The warrants will be delisted, void, and no longer exercisable if they are not exercised by the expiration date. It's therefore important to execute the warrants prior to the expiration date. In addition, Lucid's board of directors has decided that, as of the date of this notice, all public warrants would be exercised only on a cashless basis. It'll be possible for warrant holders to exercise their options on a practically cost-free basis because the redemption price of the company's existing warrants, which were initially granted on July 2020, is 1 penny per share. In exchange, each warrant will be worth 0.4458 of a full share. What could be the motivation for a corporation taking this step? It appears like Lucid is attempting to mitigate the risk of dilution that its corporate structure may be subjected to. It also eliminates the risk of a future backlog of cheap shares if the company's stock begins to take off, as it expects to happen once commercial production of the company's flagship vehicle begins. You don't want anything like this holding you back in the future. Because the warrants were deep in the money, especially at a time when Lucid stock was trading above $20 per share, the firm was effectively guaranteed that investors would exercise the warrants on a cash basis in order to obtain their shares. In practice, this means that the corporation may reasonably anticipate that all 41.4 million of its existing public warrants will be exercised at a price of $11.50 per share, resulting in a loss of about $476.1 million in gross proceeds. That money will no longer be received in the aim of completing this cashless warrant procedure. In terms of dilution, the business will now effectively reduce its dilution in connection to the warrants from 41.4 million shares to 18.5 million shares, a significant reduction. The dilution saved as a function of this exercise can possibly be sold at a better price, resulting in more cash in Lucid's bank account than the original option exercise would have resulted in at the same dilution expenditure. Any financing amount greater than $20.75 would have a similar effect. Lucid, however, was not the only electric vehicle in the market to opt for tactical cashless public warrants. Arrival Limited, a British-American electric vehicle manufacturer, and Fisker, an American electric vehicle automaker, were also subjected to the cashless redemption of their public warrants in the first half of this year, 2021. When Arrival issued their public warrants on June 18, 2021, the company's stock began a downward trend that has seen it decrease from $18 per share to a current price hovering over $11 to $12 per share. The corporation was successful in resolving the diluting issue, but at the expense of their stock price. Fisker experienced the same situation and suffered the same fate, with the stock value plummeting following the warrant announcements. On the other hand, Lucid's stock price was not only steady, but showed an upward trajectory after the announcement, showing investors believe in the corporation, which is a good sign for the company. What are your thoughts on Lucid cashless public warrants? Do you think Lucid is doing considerably better than other automakers? Let us know in the comments section. Mr. Valmir narrated an investor saying that always invest in a company that you understand. And Mr. Valmir understands Lucid, and that is what he will be investing in. That should wrap things up for today. Keep in mind that subscribing's still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.